Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
Hear ye, hear ye. I have the best news so far of 2026. 1099 season is officially over by the time you hear this episode. There are always late filings because of either missed information or W-9 forms coming in late from subcontractors or from business owners who email their bookkeepers late, but it is February and it's time to move forward. And I've been doing just that, moving on to the next phase, which is entering all the credit card data that needs to be entered and finalizing all the books that I put together for all of my clients for tax filings. More about that in future episodes. We will be talking about that whole process. But this season is your Q&A season. So here we go. I'm Paul Rosenblum. A question from Jenny. A simple question with a somewhat lengthy answer. Go ahead, Jenny.
Hey, Paul, this is Jenny in Houston, Texas. I was just hoping you could give me an example of how good bookkeeping can make a business more profitable. Thank you.
As a precursor to this conversation, let's back up and go over the definition of bookkeeping versus accounting, since the answer to this question pertains to the bookkeeping part and not necessarily the accounting aspect. There are bookkeeping processes and an accounting process which are interrelated. However, Jenny is asking about the bookkeeping part for sure. A bookkeeper is responsible for entering financial transactions into the bookkeeping system that happen daily during the operations of a company. Bookkeepers work and usually get paid for by the client or the taxpayer. The book should reflect what the company owner or their internal accounting department should know about how they are making money and how they are spending money. Traditional bookkeeping is responsible for money in, money out, and entering each transaction in the correct category on the chart of accounts. Debit card transactions, ACHs, ATMs, transfers between accounts, company or personal accounts, and credit card transactions, expenses, and payments. The bookkeeper is also responsible for credit line transactions and loan transactions, as well as payroll. In other words, any monthly or annual statements that the business receives. Accounting, quite simply, is taking those numbers and categories and making changes to conform to the IRS tax code. Sometimes that means making small or even large changes from the bookkeeper's work. And in many cases, after the tax preparer gets done with the books, the profit and loss could be very different, but for tax reasons only. I have several clients who like to have Zoom calls with me at the end of the year to go over their almost completed profit and loss reports, or even in the first week or two of January of the next year to go through their full profit and loss report category by category. What I do, Jenny, is run a profit and loss report for, in this case, as of the writing of this episode, 2025 and 2024. This way, we can compare the 2 years by just looking at 2 columns. We go over every category on the profit and loss. So even though I could just have one income account, with many clients I have several income accounts to show specifically how they make their money from year to year. If I do just have one income account, then I will create items that are line items that are entered on customer invoices, and even though all the items are routed to post to one income account, I can get a report of all the different line items that are on invoices. For an example, my own books have items for monthly bookkeeping, consulting, cleanup of books, year-end work, 1099 filings, and even a separate one for Zoom calls. So I could run a report of all of those items together for the client to see from year to year specifically what categories of income are making their company more money than others. This helps with making business decisions for the next year. In terms of expenses, I go over with the clients who want to or request every expense category and compare it to last year, the same as I mentioned in the income section. And we can see how each category affects the net profit. The more money that's spent, given the same income over 2 years, the lower the profit is. By analyzing where money is going, the business owner, or in larger businesses, the owners or CFO, can make decisions to either concentrate on specific income categories to make more revenue or discontinue services that haven't been doing well recently. In terms of expenses, if a company has a cost of goods section, to compare the last 2 years of the cost of goods costs in all the categories really show you a lot. In the case of a restaurant where every ingredient and or food is a cost of goods, looking at the cost over a period of 2 years is very helpful to the restaurateur to see what specific cost of goods have gone up and which could have gone down, and that could lead to menu changes and pricing changes. Payroll costs are very important too. That's a large category all by itself. You could see the number of employees, the total hours worked by pay period or by the month, how many people are being paid per shift, and you can also analyze the kitchen staff and the bar staff. You might need to cut costs moving forward, or hopefully not. Rather than creating a category for dues and subscriptions, if you, Jenny, are taking care of the books for a law firm or an architectural firm, you might also want to have a category of professional dues. Dues and subscriptions would be for maybe networking dues, but that could also be put into advertising, and newspapers or magazine subscriptions, and professional dues would be the state bar annual dues for lawyers or dues to a particular organization that an architect might need to belong to. That will separate specifically the kinds of dues and subscriptions that the client has. The software subscription should now be a sub-account of office supplies, as the IRS does not want to see online subscriptions in the dues and subscription category. Rent is not only for the office rent or rent for a store location, but rent should also have sub-accounts so that you are showing storage units, cold storage, and any other companies who clients pay monthly rent to. This way, Jenny, you can go over very specifically at your annual meeting with the clients exactly what they are spending money on. I personally have a client who gets 2 totally different electric and gas bills for his restaurant. It's just the way the building is wired and can't be changed. Under utilities, I have 2 electric and gas sub-accounts by location of what is being covered. In this case, it's a basement and a street level, 2 separate accounts, hence 2 separate bills. The more specific your chart of accounts is, the more fruitful this annual meeting can be with your clients. However, remember that you can get the details of transactions that are in accounts even if you don't have sub-accounts. But it is easier to compare side by side, year by year, each category and sub-accounts of each category and get a track record for each. Now, let's get into a different line of thought, one that most bookkeepers don't even think about. There are actually, in my mind, two main buckets of expenses. There are soft expenses and hard expenses. Some clients look at only hard expenses. These are rent, storage costs, insurance, payroll, cost of goods if they have any, travel, which are all obviously business related, repairs, and utilities, just to name a few. Soft expenses would include business meals, entertainment paid for by the company, even though they are non deductible, such as taking a client out to a Broadway show in New York City, even personal car expenses or a home office expense. Hard expenses are necessary expenses that have to be paid to keep the business going. Soft expenses are outgoing money that isn't actually needed to keep the business going, but are tax deductible in most cases. A bookkeeper should explain this to the client during this annual meeting. Like I said earlier, the books are designed to be put together for the client, not for the tax preparer, unless the tax preparer is paying the bookkeeper directly to put together books for his or her client. I hope that answers the bulk of your question, Jenny. A great one. Thank you. Now, most people who know me or have listened to several episodes of this podcast know that I go a little further in answering this kind of question. Accounting, as I mentioned, is taking the books that are put together by the bookkeeper and changing them for tax code purposes. The tax preparers are responsible to make adjustments to the books using general journal entries to be compliant to tax laws by the IRS. The books that the bookkeeper creates and the finished tax return in most cases look very, very different after all of the adjustments that the tax preparer makes. So at one point, the bookkeeper should get a list of all of the adjustments that the tax preparer has made to the books and make sure that they're entered into your or the client's books so that it matches the tax return. The question then becomes this. If adjustments in the form of general journal entries are dated on 12/31 and you have real credit card, debit card, or any other transactions dated on 12/31, then when you run a profit and loss report after taxes are done, the numbers won't be the same. What I do is not use 12/31 as a date of a real transaction. I'll use 12/30 so that I can run a profit and loss report from January 1 to December 30th, not showing the tax-based adjustment entries to the client unless you run a separate report and explain what all of these adjustments are to the client. Traditionally, since the 1990s, when software for bookkeeping and accounting became popular, all desktop editions, by the way, the bookkeeper would have their copy of the books for their clients, and the tax preparer would have their copy of the books, usually called work papers or work product, for audit purposes that would match the tax return prepared. However, today that traditional process is a bit skewed, not to my liking at all, by the way. The bookkeeper's books won't have the adjusting entries done by the tax preparer in them if they're using desktop. Only the copy that the tax preparer has will have those. And online editions of accounting software should not even allow a tax preparer to make changes. Those books belong to the client, not to the tax preparer. So everything now is more intermingled for my personal taste. So let's talk specifically about Jenny's question. I have many clients who will do a Zoom call with me each quarter to go over the profit and loss report. We compare the categories to the last year to the same dates of the current year to see where they are as of a certain date. Clients can see that they have spent more money on rent this year and maybe less money on website promotion and advertising, for one example. They can look at payroll numbers from one year to another, and obviously they can look at sales from one year or one quarter to another. However, sometimes it's not that easy. I have to explain to clients that there is a cash method of accounting and an accrual method. Most of my clients are on a cash accounting method so that when they look at sales from one year to another, I always have to remind them that this is the amount of money that they have received from clients, not how much they've actually earned. That can skew the numbers a bit. And the same with expenses. The expenses paid rather than including the expenses that are not paid as of December 31st. So if your client made a lot of money in November, but many people didn't pay in December, they'll pay in January, the profit and loss will show less income on a cash basis. With all that said, as bookkeepers, after we explain the hard and soft expenses and the cash basis and accrual accounting to our clients, we can now look at the actual numbers. As bookkeepers, we can recommend lowering some costs if possible in particular categories. Sometimes that could just mean changing vendors if it's the same exact product purchased for less. Payroll is a popular category to talk to clients about. Rent might be another one to talk about. Not to lower rent, but if they have any space that isn't in use, maybe they can rent it out to make some of the rent being paid out back. I, in some cases, have even looked at the phone bill for the VoIP to see if they were in the average range or if the client was paying too much for their monthly bill. There are categories that can be talked about in the cost of goods section if the client has one. You should always compare the total sales to the cost of goods to make sure that there is enough profit being made. In the clothing industry, for one example, the cost of goods could be between 30 and 40% of total sales for a successful company financially. Above 50% isn't as healthy as you would like it to be. Each category should be analyzed and talked about so that the client understands totally which transactions are in what category so that they can make adjustments relatively easily. Part of bookkeeping is also to educate clients about it. The goal is to help business owners understand their own books and what the process is. Disclaimer, that last statement is my personal opinion. Also, something that us bookkeepers can really help with, budgets. We can set up within the bookkeeping software budgets for each category of the chart of accounts and export that to a spreadsheet and send it to the client. They can then fill in the budgets for each category, and then we as bookkeepers could enter them. I know, Jenny, more work. Sorry about that. Using budgets, the clients can see budget numbers in each category right next to the actual numbers for each category. That can help a lot. With all that said, it's time for me to get back to my tax season work. Time for another cup of de-stress tea. I hope your tax season is going well, Jenny, and all bookkeepers listening to me right now. And for all you business owners, remember, treat your bookkeeper with respect. In other words, TYBWR. We work very hard for you. Keep those questions coming in. I'm Paul Rosenblum.